Right, cool. So I've got some instruments here that I would like to do some analysis on, and I would like to tell you the things that I've done that I was supposed not to have done. And even though I played by my rules, by my playbook, but at the same time, I did what was wrong because I didn't follow the playbook completely. So I'm just going to be analyzing or doing some recap on my trade actually. Today is 28th of July 2026. So as the time I'm recording this video, so that means that that's almost end of the month, and I want to tell you that this month alone I've just only taken I took just only probably maybe 3 4 trades. Yes, and those 3 or 4 trades that I took, I can't even remember how many they are actually, but those 3 or 4 trades that I took this month so far actually, because I don't know whether probably going to take another one. So far they have been amazing. They've given me some good return. So I thank God for the brain that He gave me, that I'm still using in order to be able to understand how to trade the market and how to analyze and take decisions in order to make money. So let's get right into it. So jump 10. I don't know, I don't think I ever posted this video about jump 10 trade on my YouTube. However, I took a trade on jump around here, somewhere around here. That was where I took this trade because it was a third touch of the trend line. So I took the trade actually, and one of the other reasons why I took this trade on it was as a result of this zone here, which was the supply and demand zone, and I took the trade. It was actually, you could say, actually my first TP was around here. It was around 85,500 thereabouts, and I was planning on riding into the side, but I did not do that. I closed around here, so it got me here. But when it did this bearish engulfing candle, I closed. Actually, the first bearish engulfing candle I did not close it. It was the second bearish engulfing candle that I closed. Why did I do that? Now, based on my way of trading, I took out my Fibonacci because this zone already was broken. This zone, this last candle, which was this bullish candle here, before the main one, it was broken. So I was saying that okay, yes, this is a break of structure, even though it wasn't really a break, but because there was still a wick. But on a 4-hour candle time frame, you will realize that we had a break actually on it, which is here. So there was a break. So I will say I took out my Fibonacci too. So I said that the first thing that I'll be looking for in order to close this trade is, even though we are bearish at the moment, if it comes back and close as a daily bearish engulfing candle, which was what it did, I will close the trade, and that was what I did. I closed the trade, but actually I did not take the second one, which was what my Fibonacci retracement tool was saying, that if price closed below the 61.8, I will close. But what I did was that because it closed here, because if you look at it from the perspective of here, you will realize that this candle closed below the 50% retracement. So it did not close below the 61.8 actually, but because it closed below the 50% retracement, that was the reason why I closed the trade. And as you can see, immediately I even closed it, that was the next 4-hour candle went up. So that was the mistake I did here. So one thing is that I should have followed my playbook completely. I should have waited for the trade to do what? To get to the 61.8 and see whether whether price will reverse back or will leave weak, as you can see here. So I didn't be that I waited till around this period. I'll probably still be in the trade and still be in profit as well. So that is the mistake that I did, and I believe that if this thing is going to do well, we are probably going to get to the upside here. Probably at least the first tip we are going to get here. So that is one thing. As you can see, at the fib level, which is 61 and 50% retracement. We did a morning star or bullish engulfing candle, as some might have called it. Yeah, so that is one reason why I should have left this trade. I didn't mean that I waited, but I did not. So that is a mistake I did. I'll probably be looking for another opportunity to enter this trade and see if I can rally it or go with the trend of the market. But that is that about that. The same thing was the issue that I did on 75. I took the trade at the touch point of this guy here. If you go to your daily time frame, you realize that this place was like a zone that has been broken. So I waited for the price to come back to this place that was the zone that was broken, and price came back and went up. However, I did the same mistake. When I saw this massive candle, I didn't close actually. What I did was that I went to my lower time frames. So what did I do on my lower time frame? I took out my trend line, inner trend line, and that was what made me close this trade actually. Even though I should have waited for the 50 and 61% retracement as well, I did not do that. Here, because I was trading on a trend line move. So when I saw this candle, this price or this candle here close below this inner trend line, even though I'm supposed to have been looking at the outer trend line, because the inner trend line closed below, price for the inner trend line closed below. That was the reason why I closed this trade. And as you can see, the price went a little bit almost the same thing that happened on my jump 10 trade exactly happened here. And as you can see, price went down a little bit because this one did not even reach the 61.8% retracement, and we are heading back up to the upside that it took me to, which I was making some good decent amount of money, at least in my currency, if I convert it from dollars. So because that was what I did, the mistakes that I did on jump 10 and jump 75 trade that I took. So one thing is that I should have probably still been in trade at the moment, but I'm not inside the trade. But however, I still made some profit, even though it was quite small, and I'm not feeling too good on that because I probably should have made more money on this. Because if I made this money, nobody will give me this money. Definitely, nobody will do that free of charge. But I'm making it free inside the market at the moment. So, I was able to miss all the opportunities of the money that I've made. So I'm sad a little bit, but I've learned my lesson from that I should follow my playbook completely. Now you might be wondering, why am I putting the fib zone from where the market moved first? The reason why I did that was, if you look at this, let's say I put it here because I took the trade from here and it goes here and it reversed here. I should have said that, okay, probably this place could be a reason because there was a break here. But the reason why I'm not using that break is because this guy here was the last move at the upside. There was a break of it. There was a break for it. And that's the reason why I use this place and not this place, which even here there was no break of the structure here. So that's one reason why I did not use this place as the first zone that I should have used for my fib zone. And that's the reason why I used the immediate place where the market really moved. Yeah, exactly. So that is what is happening on jump and jointing 75. So those are the updates I have for you on this trade. Now I will be looking again for another opportunity to enter this trade to see whether I can continue with the trend of the market. As you can see, and as you know, my jump 75 and jump 10 instruments, I always use the trend line point as my entry strategy for it. It has always worked for me and it will definitely continue to work for me, even though I have to do some tweaking and some other things. So that's just what I have for you guys. If you find this very insightful, kindly give us a like, share, and also subscribe.